In this lesson, we're going to take the ratios that we've learned about and use them in real life and actually compare a couple companies against each other and see how they compare about these ratios. And mostly what we're going to learn is where to find these ratios fast and easy. You can always calculate it yourself, which is very time consuming and maybe prone to error. You can always dig deep into the annual reports and stuff, and that's always good as well. But there's some nice sites as far as finding these ratios really quickly and easy. You can certainly look at Google Finance, Yahoo Finance. I use them a lot for a lot of different things, but found one actually with Fidelity that's pretty good, and we're going to show you that. We're going to do a demo in just a second here. A couple things when you're analyzing ratios. Reminder once again to consider the industry that you're comparing companies that are in the same industry works best. I mean, that doesn't mean you can't compare companies outside of different industries. Just understand that different industries react differently with different ratios sometimes, or some ratios might be important in some industries versus others. Like if you're a retailer, inventory turnover ratio is very, very important to maybe a company that doesn't carry much inventory. So keep those things in mind. And when you're comparing companies, it's best to compare them within the same industry and compare them against each other. There's some easy ways to compare them. There's some good free online tools. We're going to look at one here that I like because it really gives me all the information really, really quickly, all in one site without having to jump around at least too much. Reminder also for this demo here, it's really for education purposes only. The purpose of this lesson is not necessarily so much analyzing companies as far as picking one over another, that's sort of different type of lesson, but we're going to look at ratios and where to find the ratios, and that'll get you a starting point, and then from there you can kind of dig in deeper with the companies and figure out what fits best for you. So with this educational demo, I'm not making a specific stock recommendation as far as one company over another, but I am going to tell you which company's ratios might be better than another and other things you might want to look for or consider. So just think of that in your mind as well. Also, when we go into this, we're going to go into Fidelity, happen to have a good research type of tool. A lot of online brokers and things have great online tools too. So if you're using an online broker like an E-Trade or TD Ameritrade or something like that, they might have even better tools that you get by signing up with them, or your full service broker could do this for you as part of their full service. I'm going to show you something that's free that anybody can use, but even before we look at that, if you're already doing business with a company as far as who you're buying and selling your stocks from, then you might want to look at their tools because they might be even better. But this is a nice free tool. You can see the link here as far as looking at. And for the purposes of this particular demo, you can probably tell we're going to look at Coke and Pepsi, right? Coca-Cola and Pepsi, two big, large beverage manufacturers, and so we're going to look at them to learn about ratios. Okay, let's learn about ratios and kind of some tools to compare a couple companies against each other real quick and easy. And you know what? Fidelity, who is a big mutual fund supplier, has a nice comparison tool. I mean, you got Yahoo Finance, you got other people out there that are pretty good, but I kind of came across this. Fidelity's pretty good. So let's take a look at this one. It's free to open to everybody here. It's hard to find, so you want to go under this eResearchFidelity.com. If you go onto the Fidelity site, you can kind of search around and find it by the menus. Otherwise, just go right here to this particular site, and it'll take you to their stock research center. And once you're here and you know some companies you want to compare, over the left here is where you can enter your company name or symbol. We're going to look at Coke and Pepsi. So if you're not sure what the symbol is for Coke, you can just start typing it, and you can see it'll start popping up here. Coke, Coca-Cola, different things. I happen to know it's KO for Coke. So we're going to pull up Coke first. So we're going to pull up your first company first, and then we'll look at Pepsi side by side. But first thing you got to do is pull up one company first. So let's do that. So here's a snapshot of KO, or the Coca-Cola Company. They're a beverage manufacturer, of course. Make a lot of things like Coke and Diet Coke. They own a lot of other companies too as well. And this gives you information on them, just a quick snapshot. Price changes every day, of course. You can get more information over here on the left-hand side. But we want to go right here where it says compare, because we want to compare Coke versus another company, and then we're going to, from there, we're going to see where we can get the statistics real easy, or excuse me, the ratios real easy. So right now where we've got Coke up, you can see we've got a table here. Up in this little part here is going to be a real key drop-down menu where we can find different pieces of information that we're going to go into in just a second. It automatically defaults to key statistics, like its current price and a little chart and all sorts of good stuff that's in there as far as some current key statistics. And as you dive into it, you can start getting all the different ratios here for Coke by using these drop-down menus. But before we do that, since we want to compare two companies, we're going to figure out Pepsi as well. Now, let's say I happen to know that PEP is Pepsi, but if you didn't know, you could look it up. You could go over here and look it up like Pepsi or whatever. I just happen to know that Pepsi is PEP for its ticker symbol. So you'd want to know your ticker symbols beforehand. All right, so here's Coke, here's Pepsi. You can see it's Coca-Cola Company, Pepsi-Cola, direct, very much so direct competitors. Now let's compare the ratios between these two companies and kind of see where we can find the information and how to interpret this information based on what we've learned so far around ratios. So we have these 5 categories, right? We had valuation ratios, profitability, liquidity, debt, and efficiency, and there were ratios inside each of those broad categories. So let's take them in order. Let's start with profitability. So on here, I'm going to go under the drop-down menu, and I'm going to find, or excuse me, not profitability, we're going to go under valuation first. So we're going to first go into valuation. So you can see off to the left-hand side here, here's valuation. I just click on valuation, and now it's changed my information here under Coke and Pepsi in these 2 columns. And as I scroll down, I can start finding some of these valuation numbers. Like we're looking for things like the price to earnings ratio or PE ratio or the PEG ratio or price to sales, some of those types of ratios. So let's see what we can find here. So first off, price to earnings. You can see here is price to earnings. They got this year's estimate or versus next year's estimate. Let's say we want to look at something that's a little bit more oriented towards this year. You can pick either one, but you can see Coke is at 22.1 and Pepsi is at 22.2. They're pretty close. So, but that's where we'd find our price to earnings. By the way, at the end of the lesson, I have a spreadsheet all set up where we're going to have all the ratios together on one spreadsheet so you can see where everything's at. So you can get a kind of final determination, maybe, on these 2 companies as far as the information. So right now we're going to look at just where to find the information. So when you're looking at your own companies, you can find it. All right, so here's price to earnings. You can see that. Maybe you've looked ahead looking for some other things because you can find other things under here too. Like here's the PEG ratio. You can see Coke here's PEG ratio and Pepsi's PEG ratio, so we'll be capturing that information. We also want to look for price to sales and price to book, right? Well, here's price to sales down here at 4.22 for Coke, 2.45 versus Pepsi, and then price to book here as far as for both of those as well, 6.83 versus 12.43. And as a reminder, for all these valuation ratios, you typically want them to be lower the number the better. That means you're getting a good value for your price. The exception would be the PEG ratio, where if you want to both be under 1.0 as a reminder, once again, this will all be on the spreadsheet we'll look at the end, so you can see they're both a little higher than 1.0. So if you're a value investor, these might not be great value stocks for you at this point in time. And by the way, ratios and things like stock prices are all at a particular point in time. All right, so those are some valuation ratios, and that's why I like this site pretty nice here from Fidelity at the researchfidelity.com, because boy, I just found out all my information for valuation right there, except for dividends. Dividends was in the valuation category as well in terms of our key ratios, and we can find them easy because they have their own little spot. Here's dividends right under here in the second one from the top. So if we look at dividends, they'll give you all sorts of dividend information. How much is the dividend? We're looking for dividend yield, and we're looking for dividend payout ratio. So yield, the higher the number, the better. And here is a dividend yield percentage on an annual basis. Coke 3.32, 2.86 for Pepsi. So Coke will pay us a little bit more per share if we own that company. Also, we want to look at payout ratio, which is, we want that number to be a lower number as far as the payout ratio, and we're also really concerned that anything that starts getting over like 70% might be a little concerning. So if we look at our payout ratio, you can see they both pay out pretty high. They're 80, 85, just something to keep aware of. But you can see one number that's not part of our top ones, but something I look at when I look at dividends is growth rate. And you can see a 1 year and a 5 year average. You can see they're growing their dividends. So these are long-term dividend paying companies that pay a big chunk of their money out in dividends. So even though they're running a little high, they've been paying consistently for a long time and they're growing their dividends. If I saw a high payout ratio like this and dividends were at a negative rate or things look bad there and I dug a little deeper and they maybe cut their dividend or whatever, that'd be certainly a warning sign if you're looking at a dividend stock. But right now we know the payout ratio is at 80.46 and 85.03. So that's our valuation ratios. Now let's look at profitability, right? So can we find these ratios easily as well? See, everything's right here, really nice. So let's go into profitability. It's listed as profitability here. So easy peasy, as they say. They give you lots of ratios. Remember, there's lots of ratios out there. we're looking for three of them: return on assets, return on equity, and profit margin is what we're looking for. So profit margin, we scroll down here, or we don't have to scroll down too far. We're right here at profit margin. You can have the most recent quarter or the trailing 12-month profit margin. If you want a little bit more data or statistics around there, that might be a little better time frame. You can even go back, look in the annual reports and go back further, but they give you at least a starting point here, and you can see Coke runs a bigger profit margin, which is good. So every sale they make, they're making more money on it. So that's really excellent. Helps to pay those dividends and things. And if you scroll down, you'll see, return on equity and return on assets right down here at the bottom. Return on equity and return on assets. So Pepsi gives you a better return on equity, and Coke gives you a little better return on assets. Once again, we'll have the spreadsheet where we'll have this all summarized, so you don't have to memorize or record anything right now. We're just looking to see where we find this stuff. And maybe we're looking at things like ROI, return on investment. Higher the number, the better too. There's other types of information out here. Just don't get too consumed by paralysis by analysis. By the way, we're going to come later to an efficiency ratio, which is inventory turnover. They happen to have it here under profitability. The inventory turn, the higher the number is better. So you can see Pepsi here is a little better than Coke as far as inventory turn. So they happen to list it under profitability versus it's really more of an efficiency ratio. So be aware, sometimes they can end up in different spots.